What is up, everybody? We are back with another episode of Bullish Top Stocks to watch for the weekend. Why? Before we get into it, as always, hey, these are my opinions. Do your own due diligence. This is equal parts entertainment and also education, right? So, definitely these are things I'm watching, not necessarily playing. I do play. Usually, I play them, or some of them, but not always, right? But I wanted to give you the what and the why, right? Also, hey, real underscore bullish. Go follow us wherever you get your social media points in Instagram, Twitter, stock twits. Also, hey, give us a sub here. Help me feel good myself. Give us a like, or just comment down below what you're watching, anything you want to talk about, and I appreciate that. Start a discourse, start a dialogue, right? Also, realbullish.com. Go sign up for our newsletter and get some merch. I'll drop the link here as well. Let's get into it. Anyways, it's a very risk off, end of the year so far, right? We had some, like, I like to think of it as the perfect storm of bearishness. You got a few different things that are working against you. If you're a long or a bull, if you're a short, you're having a good time, or a bear, hey, we can all make money. You know what I'm saying? But anyways, like I said, we have, a new COVID variant coming out, for the past week or so. We don't know a lot about it yet. We don't know how, if ands or what. We don't know anything really about it now. We just know that it's here. Over the next couple of weeks, we'll kind of figure out more and more. Is it more transmissible, less transmissible, more deadly, less deadly? However the case may be. We don't know anything about it now. We're figuring that out. Also, you have Jay Powell and Janet Yellen being a little bit hawkish, being a little bit bullish, right? Setting that tone, maybe for the FOMC meeting that's going to come out next week, I want to say. They talked about transition not being inflation not necessarily being transitory anymore, like retiring that word transitory, right? So they do see as inflation being more stickier than originally thought. So that could affect, and that is affecting what they're saying about bond buying and bond tapering, right? And that is definitely bullish or bearish for the market specifically, right? We also have a CPI report, Consumer Price Index, coming up this coming week. I think it's on Thursday. So and it's expected to be a pretty fucking hot number, right? So if that number comes up even higher, I think it's going to be even more, I guess, catalyst for Jay Powell at the FOMC meeting next week to talk about, tapering rates and shit like that to combat inflation. A good problem to have, because the thinking is that our economy doesn't need it anymore, right? Which you could argue one way or the other, right? If you really wanted to. Anyways, going into it, I will start with SPY. This is actually the second time I had to record this. The first time, I didn't like the audio that much. I'm doing it again. Hopefully this time shorter and better. But anyways, as I said, this is a very risk off week that we're looking at, or possibly end of the year that we're looking at. So I'm trying to look at the market accordingly, right? One thing that I love to do, and I love to think about in terms of when it's risk off is, and we have dips like we're seeing now, is looking at these indices like SPY, QQQ, DIA, and then trying to buy those dips, right? Because at this point, I'm not betting on the short-term movements of stocks. I'm betting on the long-term movement of the American economy, which I'm very in the short term. In the short term, it could be a week, it could be a month, it could be a year. I'm bearish, but in the long term, in terms of buying, getting a dip and then can you get back out of it, I'm very bullish and how we're going to do that. And part of that is playing defensively, like a big index like SPY that mirrors the S&P 500, right? So hey, I love this area right here that we're looking at. I don't love this. I don't love that we're here at this area of 453.5, like 42. But I do think it's an interesting area because it did try to sell off a little harder, and we were able to hold there. But I can see a scenario with the upcoming week or the rest of the year where this area doesn't hold. We can possibly be hitting like that 200 moving average on the daily. We can hit that 441 area at the next level of support, right? Like I said, I'm not hypothesizing on an individual stock with this. I'm more hypothesizing on the long-term bullishness of the market in general, right? But at the month level, hey, it's looking interesting, right? You do have some, like I said, we've been selling off, for the past month. The SPY has been down like 3.25%, right? 3.23%. As of this, we do see it here in the charts, right? You do see almost like a topping here going back in November, December, playing the same way, right? It's just choppy right now. You do have RSI, kind of on the decline to be, trying to get under this overbought. We were overbought for, this is going back, let's say March of earlier this year, we hit overbought territory. And it's not a problem that you're overbought, but once you stop being overbought, like you see that decline in the RSI line, the relative strength index, you do have to worry and say, okay, great, where is it going to stop, right? And I'll look at that in the next one a little bit, right? You have MACD also kind of wanting to pinch to be bearish as well, right? At the week level, this is what I was talking about, looking at the RSI a little closer, because even though we did have a super strong week, right? And this is kind of like this is what I'm trying to hold on to right now for like a long term or a short term bullish thesis. Is even though you did see about 632 million shares to the downside, you see this is average volume. This is with a volume over average. So basically, we had twice the average volume to the downside for the bears. But when you put that in context, and I've seen people, it was one person was saying, hey, this could be like another start of COVID spike, or spike to the downside, which I can understand, like that being your worst case scenario. But if you look at the volumes, it's just not there. Like I said, last week, or sorry, this past week, we had, 600,000, or sorry, yeah, over the last week we just don't see that, right? You do see like that coming in, so you have like 642, like I said, shares traded to the downside. But if you put that in context with like the height of the COVID spike, you had like 1.6 million shares traded in that 1 week alone to the red downside, right? I think this is going to be more in line with kind of what we saw when we looked at, let's say, like if you look at the week level, if you look at like October or something, right? It's still over that, but it's closer in line to that October sell-off of 545 shares to the downside versus that 1.6 million shares for the COVID spike, right? And similar to that, right? Like I said, looking at RSI, if we can kind of stabilize at this RSI level, which it happened in October, sorry, the end of September, October, and you see that same thing, kind of similar thing happen here with this line here, let's say the end of last year. So around the same time last year, right? You see a shakeout to the downside. You see RSI was able to hold, MACD followed suit, right? And then held that line. So I think it could be an interesting area to kind of watch here. For me, this week is going to shake out how I trade for the end of the year, right? If we can hold this or if we cannot. But like I was saying, this area here is interesting. This, let's say 453 point, whatever that is, 454, let's just call it rounded up. And this is something that I drew earlier, right? I'm always watching indexes. This is one thing that I drew earlier, maybe a month or 2 months ago, right? Drawing this area of support here, because you do see that it was topping out right here, right? It rolled over to be to the downside, but so far it's finding support at this area. Now, the charts tell me if it's a glass crystal ball, but it's telling me there's more downside here. But for now, it's holding. I can see an area where, like I said, it falls to this 441 area, possibly this 200 EMA. But I'm hoping that it's going to be another scenario, and you never want to hope, but this is what I'm watching, that it can play suit like earlier in October, November, where you did see a hard decline, but it finds support at this 50 moving average, right, and then bounced off of there, right. Too early to tell right now, but we'll see how to play it. In the vein of being, more, I guess, more conservative and not trying to play, trying to play more indexes and stuff. One of these that I'm watching specifically, and there's an interesting Barron's report for not ITB specifically. The title is called for Barron's. It's called, and I'll drop it in the show notes. The housing boom could last for a decade. Buy the stock now. Decade is 10 fucking years. Basically, their thesis is that supply demand factor was already skewed before COVID even started. Before any of this housing market that we're seeing over the past, let's say, year started. Housing market was already at a supply demand for new homes deficit, right? We had more supply than the demand for housing, right? And they talk about an interesting one here. A couple factors that are exasperating that are making it worse: the shift to work from home and millennials entering the buying market now. I am in both of those buckets. I'm a millennial that's going to be working from home for basically probably forever, because I'm never going back to the office the same way again. But anyways, that actually made me move to want to buy a home. I didn't really buy a home before. It wasn't on my radar. And then when I sat down and said, I'm going to be working from home forever, or not forever, but probably for the rest of my working career, I don't want to, I want to be in an office. I want to have a house, blah, blah, blah. That happened about this time last year when I started. And I did that. And now I see a lot of my friends that were doing that at the time, still doing it now, doing it now a little bit later, having a hard time to find a home because those entry-level homes, it was hard to find this one. It took me like 2 months, right? But anyways, like I said, they have an interesting quote. The inventories of existing homes remain near historically low levels. Construction starts on new single family housing. Meanwhile, we finally topped 1 million this year. 1 million new family houses created this year, after averaging fewer than 750,000 in the previous 10 years. But that is still below the 1.6 million annual new homes from 2004 to 2006, for that peak of the housing bubble, right? A whole different context, whole different, a bubble, I guess you could say. But that was, 1.6 was the high. We were averaging about 750,000 a year. Now we're at 1 million. That's still not enough. What I like about ITB specifically, I was just looking at a pure play construction index. Like I said, I'm not trying to bet on individual stocks. I'm looking at the long term bullishness, right, of industries, right. And this one was interesting for me because like I said, the SPY has been down two-thirds percent, but I want to say that ITB has been like a banger, and you can see it over this past month. Instead of being red, hey, you got a strong green candle here, right? And Seeking Alpha specifically was kind of has another different article about ITB specifically, right? That was interesting, and they were talking about individual ones, but I haven't looked at I haven't gotten into that one as yet. But anyways, ITB, I was trying to pander as I looked up ITB's 1 month performance. ITB is up 8.38%. As of today over the past month, where the SPY is down 3.25%, right? So I like to look at strength in the time of weakness, telling me what I should kind of be looking at, right? Interesting one here. But anyways, at the what I like about ITB right here at the month level, it looks good. You got RSI kind of poking up. You have MACD. It's still like on an up to the right trajectory, right? You do see that there was an area of consolidation here going back from April of this year all the way up to basically last year. So you haven't missed anything yet. It just made the move out of this consolidation area. I like when moves start breaking out of consolidation areas. It's kind of moved a little bit fast. At the month level, you're almost in a new area of support or resistance, which is interesting, but I would expect that to kind of cool off a little bit, and that's perfectly fine for me. Like I said, hey, you can look at it a little bit clearer on the week level, which I do want to. You almost see a W, right? There's like, I think it's called the Adam and Eve double bottom, where one's deeper, or sorry, one's wider and one's more narrow. But basically, how you usually play double bottoms is you take the move of the bottom to the break here of the middle, and then you layer that on top of the breakout area. So for this one, if I'm looking for a price target, I'm going to say about 85, because that's taken into account, back of the napkin math, that break here on, sorry, that difference of here to the middle, laying that over the breakout area here and saying, hey, okay, layering it on top, right? It's 85. Interesting though, at the week level, you do see RSI coming up. MACD's been bullish for the past 4 weeks. You see 4 weeks of green MACD movement here. You do have volume over average. You had 24 million shares traded of this index of the past week alone. The first week over average in a while, right? Usually it's 13 million. We traded at 25 million, you could say. But interestingly enough, if you break it down into the day level right here, is this was an important area it needed to break out of, because now it's at all-time high area. You do see a little bit of sell. That's why I said it looks like it raised almost too fast, too soon. Now we're seeing a little bit of consolidation, which is perfectly fine, especially if it stays over this 79, let's say 78.63 area of support or area of significance, right? If it can stay over above that, I'm on it on a long time. But if it kind of cools off, comes close to the 74 area, I'm okay with that as well. Because like I said, I'm not looking at those short-term movements. I'm looking at the long-term trajectory of the housing market, which I am very bullish on general. And I've wanted to look into for a little bit. I wrote a note down to look into it, and it wasn't until I read that Barron's mentioned that, or Barron's article, that I was like, okay, great, yeah, this gave me the catalyst I needed to look in the industry more. So I'm glad I read that. But anyways, I was so in the vein of kind of like, yeah, maybe more risk on, but still risk off. I was looking at MTH specifically. They're the number 2 home builder in the. Oh, sorry, all right. Also, ITB, the one we just looked at, there's the top 6 holdings. Like 3 of them are the top market. So it's 3 of them are the top home builders by market cap in America. And then, I think it's like the 5th and the 6th holding. So like holding it, think of it as a percentage of the total bucket of how many shares they have. The 5th and 6th place are Lowe's and Home Depot. So those are always good to have, right? Because they still play into the home building, home renovating, home buying vein. But the top, I don't want to say the top 3 or 2 for sure, 3 I think by market cap pure play home builders are in that ITB. The one that I didn't see in there though is the one I wanted to link to now is MTH. This is number 2 in the housing industry quant rating for Seeking Alpha. So if you go to Seeking Alpha, you go into their quant rating, you go to MTH, you'll see on the right hand side like 3 different ratings. The quant rating is more of that quantitative approach to looking at stocks, and it's very bullish, right? This is the number 2 in the whole industry in terms of home building industry, right? Like I said, the SPY has been down 3.23% over the last month. MTH is actually up 7.33%. So in a time of of weakness for the industry in general, this one's actually up, right? So that's exactly what I would look for. The charts actually look really interesting to me too. So, like I said, it's a risk-off environment for right now. Basically, your high growth names, anything that's in an arc fund is like not, unless you're short the ARK fund, anything in the ARK fund that has a high valuation basically and high growth trajectory is not really in favor right now, and that's okay. And that's why I'm looking at value, and that's why I always think about valuation in the back of my head when I'm investing or trading, however you want to call it. But the valuation for this one, MTH specifically, is pretty low, 6.10 price to earning ratio. That's the lowest. If you're going to Seeking Alpha again, that's the lowest price to earning ratio in the peer group, right? But the revenue and gross is really in that middle area, right? Which is interesting. Number one is, I think, is SKY in the industry for the quant rating. I didn't like that one because the valuation was just fucking high. The stock is up like 17% over the past month, so maybe that one already took off. I wasn't interested in that one, but I think that MTH specifically was an interesting one for me. And when I was looking at the revenue growth over the past, I think 6 years, they had a kind of they had single digit revenue growth over the past few years. And then the past 3 years, it really accelerated. I want to say from 19 to 20, it was like a 22% increase in revenue, and then 14%. And now this next coming year, so going from year 2021 to 2022, there's an expected 21% revenue increase in this industry, which is really good. So I really like that. Double digit revenue growth in an industry like that's pretty stable. I like that, right? All right, so looking at the charts, one reason, and then I looked at the charts and I was like, wow, this is interesting. If you know what a cup and handle pattern is, this is a cup and handle going back to basically fucking 2005, right? You see where that, basically where the market went to shit. We see it come here. We see a handle here. If you know what a cup and handle is, basically you see a rounding bottom. You see this fucking handle, coming down out of the breakout area, and then you have a break of that lip of the cup, right? And almost like you can see another cup and handle forming in that cup and handle, which is exciting to me. I love that. Like two formations in one. So then you can see it a little bit more better at the week level here. You see the second cup and handle coming out. It didn't break the bottom of this cup. It didn't go lower than the rounding bottom, but you do see it break out. And now we're at that area of breakout here above $111, where hopefully that new leg of the handle kind of plays up to there, right? Like I said, at the week level, it looks very bullish to me, right? You have RSI going the direction you want it to go, not too steep, but a good incline. You have MACD that's just been bullish for, let's say 4 weeks or so. Right here, you can see that with these kind of green candles here, right? As it's breaking out of this area of consolidation here that you've had, basically it hadn't been able to break out the 112 area since 817, right? So there's been at least let's say 5 months, 4 months at least of this consolidation right here, and you do have a breakout area. It's trying to find support here at this new level to kind of make that new leg up, which I'm enjoying it, right? Again, at the day level, you do see, basically since 719, there's been like an upward channel that you can kind of connect the lows of these two channels and say, hey, it's kind of grinding this a little bit higher. You do see higher highs coming in as well. For like this is a high here, right? So it's looking really good to me. There is a little bit of sell-offishness in the day area though, so that's why I'm not looking at the day level for this one specifically. I'm not looking to day trade this one. I'm looking to hold this for a longer time horizon because that's what the market's giving you, right? But again, like I said, if it can hold this area of 117, I really enjoy it. For a long-term kind of play, right? All right, I'm gonna got two more and then I'm done. One of them I'm going to talk about is one I've talked about before on episode 41. I called it out like a blurb on the bottle, basically on the bottom of the show. But basically on 11:15 before market open, they had an ER. So this year I went pretty well and it popped. You saw the pop and the sell off. I was playing for the pop, but anyways, they beat on top line revenue on 11:15. They beat on EPS and they declared a 46 cents dividend, right? That's payable February 28th is the ex-dividend date. And how you think about an ex-dividend date is you hold that stock until that February 28th date, and then they pay you out. So if you sell it on February 29th, if there is a 29th, yeah. If you sell it like a day after that, you still get, the proceeds of the dividend because you were on before February 28th, right? I did call this industry, this play specifically unsexy, and it is unsexy, but unsexiness in the market is the new sexy right now, right? So over the past, like I said, month, and that's what I'm trying to look at, areas of strength in an otherwise weak time. This is actually up 1% in the past month. That doesn't sound like much, but the market's is down 3.25%. This is over the past month, or as far as the SPY specifically, this one's up 1% over 1% over the past month, right? And they have an investor day on 12/9/21. I love investor days because they kind of show what the thinking of is the company now into the future, right? And the charts are kind of not looking too bad, right? At the day level specifically, right? If you're looking at a day, you had, let's say some volume over average. Most of them have been to the upside in a hard market right now, right? You do see RSI at the day level kind of rounding rounding out to be bullish right here. You have RSI at 54, it came out of 36 that we were looking at 12.1 to start the month, right? The same MACD is kind of doing that same area where it's kind of rounding out to be bullish. And then as long as it can stay above this kind of 82 area, right, around this level of support, I like it. You did have a channel that was upward. You had an upward rising channel, and that's why I was looking at it. And you had a support line here. It's under the upward, like the bottom channel of support, but it's still finding footing in this area of resistance that has been an area of an area of significance going back, basically to before the pandemic, honestly. So this is a really important area and going to be, a time for Tyson right here. But I think that's investor day can be an interesting catalyst. Again, go to episode 41 for my original bull thesis on this one. CVS is another one I wanted to talk about for a few reasons, and I'll try to wrap it up pretty quick. I'm already at 20 minutes. Dang. So CVS again has an investor day on 12/9/21. CVS is interesting because their investor relations team has been like on their shit. They've been doing their thing over the past like month and a half. They've been coming out with interesting pieces of news that is leading up to this investor day, and I'll tell you what I'm talking about, right? So there's an investor day, like I said, a virtual investor day on 12/9/21. And it's almost like CVS is disrupting themselves, which is interesting. So on November 20th, right? So the end of last month, Inc. had an article where they called out CVS for closing 900 stores over the next 3 years. So CVS is actually getting smaller over the next 10 years. They're closing 10% of its stores over the next 3 years, right? And they are establishing new practices and procedures and people, right? They now have a chief pharmacy officer that will oversee the omni-channel pharmacy efforts. Whoa, omni-channel pharmacy efforts. That's interesting, right? They have a new role, like I said, a chief pharmacy officer, right? And they're pushing into the digital world, which I really enjoy about them, right? So they're changing store formats. They did call in that they're changing not to be the place you go for your coffee or your ground coffee or the little thing, your cereal. They're really pushing to be a health and wellness experience. Digital, right? Digital, which is interesting. They did now that all that change comes with a knock to the EPS potentially. So they called it an impairment charge, a knock to the EPS as they go to expand. But I'm okay with taking knocks to your earnings per share as long as you're using that to expand. This is a situation where they are. Also, then came, so that was November 9th, 18th, 20th, right? And then December 2nd, Microsoft and CVS announced a new strategic partnership alliance to shift to their digital first, right? The article is super long, but it goes into a lot of the fun things that Microsoft and CVS are doing to partner to be digital first, to be a true omni-channel experience. And that's all. And then this virtual investor day comes along on 12/9 to kind of pull all those pieces into the picture, put all those pieces of news in context to hopefully show that new level of growth, what I'm excited about. So I never thought I'd be excited about CVS, but I think this is really interesting. And the charts kind of show that out a little bit, So over the last, day, like looking at the day chart, you do see RSI. RSI was hot. There was a few things that were bearish on this. You had the top of the channel here. You had a double top over here. You had RSI that was super high at 80, 82, 83-ish. Cooling off. It needed to. You saw MACD kind of round out to be bearish as well. But then you see, coming up to this last week, it found an area of support here at that, 90.06 area, let's call it, right? And if you can hold that footing, I really like it to make another play for the top of this channel. I'm not saying a breakout, but another play. I can see how it's rounding out because you see price action coming. You see it found support here at this area where it needed to of support. You see a moving average here, the 50, where it found support here. You see RSI rounding out to be to be bullish as well. I don't know why bullish and bearish. I just can't get them in my head when I'm talking. And then you have MACD kind of rounding out to be bullish as well, right? So I think there's a lot of interesting catalysts. The chart looks good to me from a day, just looking at the day perspective, and they have a lot of interesting news coming out. And that investor day is woven in perfectly to kind of pull together that whole story to hopefully see some shit to the upside. But yeah, at the week level too, it looks a little bit mixed. There has been some average volume coming in on the downside, but that's kind of market weakness as well. But the health industry right now is really good, right? Health industry is pretty strong right now, and I think that CVS is positioning itself using a catalyst of COVID, honestly, to like be that health and wellness space that we go to. But anyways, good luck, everyone. Like I said, it's definitely a risk-off environment, so be smart with your money and protect as much as you can. And everyone have a good day, a good week.